Welkom bij de Autonomy Show, de podcast waarin we onderzoeken hoe financiële soevereiniteit er echt uitziet, door de werelden van banken, crypto en DeFi samen te brengen. Ik ben jullie host Leandro, fractional CMO bij Monflow en founder bij Metaverse. Zoals altijd zit ik hier samen met mijn co-host en CEO van Monflow, Chai. In deze show praten we open en eerlijk over de toekomst van geld, persoonlijke autonomie en de systemen die mensen in staat stellen om echt eigenaarschap te nemen over hun financiële leven. Yes, now it's working. All right. Thank God. All right, everybody ready so we can start? Okay. Hi everyone and welcome back to a new episode of the Autonomy Show. Today we are joined by Julien Vallet, CEO and founder of Finst. Welcome to the show, Julien.
Good morning. Thank you for having me.
How are you today?
All good, thank you. Freshly.
Nice.
It's quite cold these days, but very happy to be with you.
Nice to have you here. Julien, can you introduce yourself a little bit? Who you are, what your background is?
Yeah, sure. So my name is Julien Vallet. I'm French. I'm 33 years old. I'm the CEO and the founder of Finst. We're one of the largest crypto platforms in the Netherlands, but also one of the fastest growing in Europe. We have a MiCA license that we got from the Dutch authority for the financial markets a few months ago now. We started Finst 3.5 years ago now, almost 4 years ago. Prior to that, I was working at De Giro, which is the largest online stockbroker in the Netherlands, but also in Europe. So I was responsible for the French market there. Joined as one of the first employees in 2014 in Amsterdam. And prior to that, I was working in banks, in 2 different banks in wealth management. So I've spent about 15 years in banking, wealth management, trading, and online brokerage.
Why did you start Finst?
Good question. I think a little bit for the same reasons as we started the Giro back in the days. Basically, I think Bitcoin and crypto started to become really popular in 2016, 2017. Of course, it existed before that, but let's say the mainstream population started to really dig into Bitcoin in 2017 when there was a big bull run. When we were at the Giro, a lot of people were asking, hey, can I buy Bitcoin with you guys? And it wasn't possible. And I'm sorry, I'm a little bit sick, so I'm going to try not to cough too much. And basically, when the Giro got sold to Flatex end of 2019, beginning of 2020, we were looking for our next adventure together with my co-founders. And back then, when we looked at the crypto landscape, we thought, gosh, it's so expensive to buy crypto in 2020. Most of the platforms were charging 1%, 1.5%.
Yeah.
And coming from the stock market, of course, that was a bit strange because 10 years before that, it was also very expensive to buy stocks and ETFs. And now if you look today, it has become a commodity and it's become almost completely free. So we thought with our background, our knowledge of trading platforms in general, we think we can really slash down the fees by 5 to 10 times for retail investors, but also for institutional. And so fee was the number one reason. We thought it was really way too expensive. And number two, we thought in terms of safety and transparency, when we looked at the platforms, how they operate, sometimes they don't have a headquarter, no licensing. They were lending clients' assets and just using clients' assets in different ways. You can remember FTX probably as a good example of what went wrong. So we thought in order for crypto to become really democratized, to really become a trusted asset class, there needs to be 3 things: transparency, safety, and by safety I also mean regulation, and it needs to be accessible, meaning that anyone, regardless of the amounts of their investment, should be able to buy crypto and not pay a few percent per trade. So this is really what pushed us to build Finst. And on top of that, we came with a lot of experience on building trading platforms that are easy to use, but also comprehensive. For example, in 2020, when we looked around, it was very hard to find a platform where you could monitor your performance very easily. So monitor your monitor your profits and losses, unrealized but also realized, monitor your break-even price. And we thought, hey, if you want to become a better investor, you really need to understand how you're doing, because if you don't know how you're doing, then you can't improve. So we thought, hey, let's bring together with our team, which comes from the Giro and has built the Giro, engineering, compliance, design, we thought we can really add value to this industry. And so far, it's been a tremendous journey, almost reaching 100,000 users now in less than 3 years, processing billions of trading volume every year. I think we have about 350 crypto now available on the platform, with some of the most important liquidity in Europe when it comes to Euro pair. So yeah, we've come a long way, and I guess we'll probably come back to this topic a little bit later.
Yeah. So, Julien, what are the main things from the Giro that you learned, that you implemented or used in Finst?
Number one is safety, and by safety, I think most retail investors don't really understand what it means to have a safe platform. I think everyone wants a safe platform, but what does it mean, a safe platform? I think number one for us is asset segregation. So before MiCA, for those who don't know, MiCA is now the new European regulation for crypto platforms. Before that, there was no obligation to segregate the assets of the clients from the assets of the company itself. What does that mean? It means that if the platform would go bankrupt, then basically the client's assets could be lost either in part or in full. And that's exactly what happened to FTX, actually. So in traditional financial world, under MiFID, which is the regulation for investment firms, it is mandatory to segregate your client's assets from your own assets, which means that if you go bankrupt, if we were to go bankrupt tomorrow, which is very unlikely, but let's assume all the client's assets are protected by law due to this structure, because we have a stichting, which is a foundation, which is very Dutch, but for those who are non-Dutch, it's sort of a trust. You can see it that way. It's a separate entity which doesn't do anything. It just holds our clients' assets. And this is really fundamental to ensure safety, because what you want to make sure is that no matter what, your assets will be safe. So that's something we brought from the Giro that was used a little bit in the Netherlands, but outside the Netherlands, there were many countries where all the clients' assets were on the balance sheet of the platform itself. I don't want to get too technical, but this is really, really important for people to understand asset segregation. Number two is lending. I think there were a lot of platforms, and there are still platforms that sort of mix lending and staking all under earn or reward programs. And I think this is a bit of a lack of transparency. I do want to be clear, lending and staking are completely different. The risk associated to each of these services are completely different. And we thought we don't want to offer lending to our clients. It is too risky. And of course, everyone would like to get a little bit of interest on their Bitcoin. But at the end of the day, and we could also make revenue out of this, actually. So we said no, because we don't think this is in the interest of our clients. And we don't think the risk-reward balance would be high enough for us to offer that to our clients. So I think making sure that you invest with a platform who is not lending your assets to a third party, I think that's really important as well. And of course, you need to have a headquarter. It needs to be clear where your platform is based. So a lot of platforms are still based in the Seychelles, Bahamas, British Virgin Islands, where obviously if something goes wrong, you have no protection, right? So you're on your own, unless you want to go to court in the British Virgin Islands, but obviously that's very difficult. So a clear corporate structure, a clear segregation of assets, and services that ultimately are in favor of your clients and protect your clients. These are the things that ultimately contribute to having a safe platform. There's many others, but I think this is really a strong basis that we brought from the traditional financial world into crypto.
Yeah. What are currently the earning models that clients can have at Finst?
You mean to gain interest, right?
Yes, to get interest in it.
So basically, we offer a staking service which is fully flexible. I think a lot of platforms offer staking, but it's not always flexible. With us, if you stake some assets, so we have 7 assets, and I'm giving you an exclusivity here. We're going to launch 8 more, so we're going to have 15 in the coming few weeks. A few things that make our staking program a bit different. So full flexibility. If you buy an asset, it is staked automatically. You don't need to do anything. It doesn't cost you anything. You earn interest on your stakeable assets. We have some of the highest interest, flexible staking interest in Europe. We have a comparison on our website very transparently. So we are quite proud of being able to offer our clients some of the highest interest rates. and they can sell or withdraw their coins at any time. So it's completely flexible for the users.
Yeah.
So yeah, basically the combination of flexibility and very high interest rates is something that our clients really like.
Yeah. So in other words, the clients stay in control as much as possible over the assets.
100%.
And
Yeah, you can
what I
choose to do
also
it.
saw, I think that you're also offering staking products for coins that normally have. If you want to unstake it, it takes a longer time.
Yeah.
For example, Atom, right? How do you do that? I think that is a very interesting an interesting innovation in the market.
Yeah, I think that this is correct. There are protocols like Atom, like Polkadot as well, where
Yeah.
it's even longer. It's 28 days, but also Ethereum, because Ethereum in normal times take about 9 to 10 days if there is no exit queue. But recently there were exit queue which led up to 40, 45 days
Yeah.
to unstake your assets. So what we've built is we've built a very advanced liquidity management engine. And basically, we monitor the liquidity among our clients' assets. We monitor the yield that we get on the blockchain, and we adjust these factors in such way that we, as a platform, have to wait 21 days when our clients unstake, but you, as a client, you don't. So we take this risk on our side. We monitor it very closely, and indeed, that's something that investors usually like because waiting 21 days or sometimes even 28 days in crypto is a very long time. And if the market goes down, like in October, if it goes down 15%, then you cannot sell, you cannot withdraw. And that's indeed something which we think is quite innovative. I think a lot of clients don't understand basically this kind of unbonding period and lockup period.
Yeah.
But I think it's really a great added value to be able to sell and not have to think of unbonding period.
Yeah, yeah. And I saw that on Finst, you can also have a different type of products that I don't see anywhere else, which are bundles.
Yeah.
Would you mind to describe that in more details?
Yeah, well, that's also one of the reasons why we built Finst. So basically, in 2020 and in the last years, I think if you look at traditional financial markets, a lot of retail investors are using ETFs, which are very popular now. If you want to buy the IEX or if you want to buy the S&P, it's proven that they often outperform active funds. So basically, if you want to build your wealth, ETF are really a good product to do it. And when we built Finst, we thought, hey, how come there is no equivalent of an ETF in crypto? Because basically the premise is the following. If you go in the street and ask 100 people, do they know Bitcoin? Probably they will all say yes by now. Ethereum, maybe half will say yes. After that, I think you fall under 5% of people who can name you a third cryptocurrency.
Yeah.
And I think the reason why some people don't want to invest in crypto is, number one, they don't understand it. So I think there's a bit of education to do, and that's what you guys are doing with your podcast as well, as trying to educate people. But also because they do not know which crypto to buy and when to buy it. So we thought, hey, let's build a solution where people can buy the top 10 or the top 25 crypto in one click, which follows exactly the market capitalization of each coin. So we don't decide which are the top 25. It's by market capitalization. So from the largest to the smallest, you buy them all. Every month we do a rebalancing of your bundle to make sure that it's still in line with the market. And that way you diversify your investment in one click and you don't have to think, which crypto should I buy? When should I buy? And you can also, so we have 8 bundles currently, top 2, top 5, top 10, top 25. And we also have sector bundles, like a green bundle for the most environmental friendly crypto. We have a metaverse bundle, etc. And what is really interesting is if you add auto invest, so basically we have investment plans, so you can set up a monthly or weekly or daily purchase automatically of a bundle, and then it's really a full diversification and fully automatic. You have nothing to do. You can set up a recurring bank transfer, auto invest bundle, and you just invest on autopilot, and you are constantly diversified. And this is something that about 20-25% of our clients use. It's really popular, not just people usually think it's for beginners, but actually it's not just for beginners, because a lot of people invest in crypto, sort of, they buy individual crypto, and then at some point they realize that sometimes they overtrade, or they just bet on the wrong horse, or they just buy 2 crypto instead of diversifying with a bit more. So we also see a lot of active traders who have a large portion of their assets in a bundle, because then they sort of don't touch it. It's long term, and then with the rest, they're a bit more active. They have a bit more active strategies. So it's a really great product. It's not an ETF, but it behaves a little bit in the same way.
But it's always the top 10. So if a coin goes out of the top 10, it's
Correct.
also right.
Yeah, that's correct. And of course, you own the underlying crypto. So when you buy the top 25, you own the 25 crypto. It's not a synthetic instrument. It's not a CFD. Those are real crypto. And you can even unbundle the bundle. That's sometimes that's a feature we built recently as well. So it's really exactly as if you were buying 25 one by one, but you buy them all in one go. And we determine the proportion based on the market cap.
And what does it mean, unbundle the bundle?
So basically, we have some clients who there's two possibilities. Number one, we have some clients who want to withdraw the coin to their ledger.
Yeah.
And of course, when it's a bundle, you cannot withdraw a bundle. So you can unbundle. And basically, if you have the top 10, instead of having one position in your wallet with a top 10 bundle, after you unbundle it, you now have the 10 positions individually. And then you can sell some of them, or you can withdraw some of them to, let's say, a ledger or whatever, MetaMask. So those are a bit the use cases for unbundling a bundle, which is not something that most people do, but it's at least it's there for those who would like to.
But you can bundle it again.
No, you cannot bundle it.
Okay, just
because if you sell one, then of course we cannot reconstitute the bundle.
No.
So no, you cannot bundle and unbundle and then rebundle again.
Okay, but there is a slide of it's positive because people buy a bundle, the top 10. So they know it's the top 10 of the total market cap. So it's very nice to have the top 10 or the top 20 of 25 for
and
people.
The top 10 currently, it's about, when you buy the top 10 crypto in the market, you cover about 90% of the entire market.
Yeah, exactly. Yeah.
So that's more than enough, actually. You really don't need, I mean, of course, there are people who want the latest meme coin, and that's they can also do that. But if you want broad exposure, it's perfectly enough to buy all the top 25. And fun fact, I think it was 2 months ago, we looked at the performance of the bundle in 2025. I think it was in October or November. So from January 2025 to October, November, I don't remember exactly. We looked at the performance of our top 25 versus Bitcoin alone, right? And our top 25 bundle outperformed Bitcoin by about 19 to 20%, which is, I think, really interesting because the question everyone asks is, should I buy a bundle? Is it better to buy a bundle than just Bitcoin? And last year, over 10 or 11 months, you would actually generate 20% more in 1 year, right? Or 11 months, which is quite significant. Than if you were buying Bitcoin alone. So I think we didn't have these numbers when we launched. We did backtest the strategies before we launched the bundles, but now we have real numbers. And of course, as I always say, numbers don't lie. So it's actually very interesting to see the difference in performance and whether or not this is something that you as an investor would prefer versus buying individual crypto.
And if you would look at the top 25 bundle, how much percentage of the investment goes to Bitcoin itself?
I can tell you that in real time, if you allow me 1 second.
Okay.
I think it's probably about, I'm just going to scan the QR code to log into my account. And I can tell you what it is, because of course it moves constantly, right? Because the market moves constantly. So as we speak, in the top 25, there is 45% Bitcoin.
Okay. Yeah.
Okay. Yeah.
And if you look at the top 10, for example, then it is 41%. So it moves a little bit depending on the number of coins and the market cap of the other coins in the bundle.
And I'm curious, how did you achieve all of this in like 3 years? What do you think it accelerates?
Number one is we are very grateful to have an extremely talented team. Our engineering team is the same team who built the Giro.
Yeah.
So it's not the first time we build trading platforms. Actually, we started to build Finst at the beginning of 2022, and we went live beginning of 2023. So it took us 1 year with about 8-9 people back then. Now we are more people, of course, but I think it comes from experience in doing this for more than 10 years. That's and having extremely great people who have 20-25 years of engineering background on average. So we have a very, very senior team.
And maybe the timing was also right because 2022 was a bear market.
Well, To be very honest, the timing was interesting to say the least, because we launched in January 2023 on the
Yeah.
9th,
Yeah.
when Bitcoin started to pick up actually in 2023, which was a good timing. But
Yeah.
2 months before, we had the FTX bankruptcy.
Yeah, that's
So of
true.
course, when you're building for 11 months, and then a month and a half before launching, sorry, you hear that one of the largest crypto platforms in the world just went bankrupt.
Yeah.
In terms of trust, you have a lot of work to do, and I think that's what we've done. Hopefully, and I can see it from our growth rates, is clients really trust us, also because we come from the Giro, and they know that it's a big name and it's the same people. And when you look at when you read our T&Cs, it's plain language that anyone can really understand, and there's nothing to hide. So I think when you're transparent, when you really show your clients with actions that you're safe, etc., then you, despite sort of extraordinary events like FTX, we still managed to grow really quickly. So the timing was what it was, and at some point, I think when you build a company, you shouldn't worry too much about timing, because there's never a perfect timing.
Yeah.
That's true.
It's like having children. You can think about it for 20 years and try to time it perfectly, but truth is, there's always something. I'm saying that because I just got a 6-month-old daughter now, and I think it's a little bit the same, because I think a company is a baby for an entrepreneur. It's your baby, and I think it's important not to pay too much attention to the perfect timing. It's about doing something that people want and need, and then you should just go for it.
And from your personal perspective, what are the crypto projects you're most excited about?
Look, I'll be honest. I try to stay a little bit away from projects themselves. Also because we are a broker, and I think we don't have market exposure. We don't list assets, as in we don't speak to foundations or project themselves and list them on our platform. That's what exchanges do, but we are a broker. So we try to think about it from the perspective of what is relevant for our clients, rather than what I like personally. Now, I understand that's not your question, but I think I like projects which ultimately can really lead to real use cases. I think we've seen a lot of, for example, NFT projects in the last years, and now that hype is a little bit gone. So I always respect people who invest so much time and energy in trying to really change the world. I think everyone should give them a lot of respect. I don't have something personally. I think real world assets is interesting. Tokenization is really interesting. We've seen a lot of great steps in that direction. I like projects that ultimately will contribute to help bridging TradeFi and DeFi, because I think there are a lot of things that can be combined, and I think one can benefit from the other. TradeFi is still a bit of a sometimes dinosaur industry, which runs on very old school technologies, processes, etc., and rails. I think DeFi can, really help TradeFi in that sense, and I think DeFi can also benefit from a bit more maturity, a bit more regulation, a bit more stability. And I think it's, for me, I like to see the combination of these two worlds as one new world in which one benefit from the other. So any project that ultimately helps that and helps people, live better. Ultimately, I think those are the great projects. I don't have names in mind, but there's so many different projects also that are coming into the market now.
Will Finst also integrate more DeFi protocols?
That could be. I must say that's not something that our clients really request. I think the problem with DeFi is the liquidity. We have some of the best spreads in the world in Euro. And we have an order book, so it's completely open. Anyone, you don't even need an account. You can just go to our platform and look at our spreads on pretty much all the coins, and they even go negative sometimes. So we take a lot of pride in being able to offer extremely deep liquidity with extremely low fees, because we also charge nothing in the spread. So we aggregate liquidity from many venues. And I think as soon as you look into DeFi, you often run into liquidity issues. So if there were opportunities to trade on DeFi and for our clients, right, for us to aggregate DeFi exchanges in a way that it's cost-wise as efficient as traditional market makers, OTC desk and exchanges, I think we could do it indeed. But so far, I still think there's improvements to be made in that front to really, because if you want to buy 500,000 euros of a coin, like sometimes when there is a contract migration or when there is a token that is being bridged, etc., to a new network, sometimes we look at using DeFi to basically perform that migration or whatever it is.
Yeah.
And usually we have quite large amounts to swap, to bridge, etc. And when you start looking at six figures volume, then you really, really pay a lot in the spread and you lose so much in the spread. So yeah, I think it's great to use DeFi, but it shouldn't be just a cool thing. You know, there should be a real interest behind. If you want to buy a Bitcoin or Ethereum today, I don't think DeFi is really going to help. So we're not against it, definitely not. But it needs to be a little bit more institutional grade for us to start using it.
TVL is still low in DeFi at the moment.
Yeah, it is.
So it has to evolve. But yeah, DeFi, it exists since 2020, I guess. So yeah, it has a lot of future. So I think it will be in 5 years very interesting, I guess.
Probably.
Yeah,
We definitely follow these.
And ultimately, what do you hope to achieve with Finst?
Well, the goal is clear for us. We want to be the number one crypto exchange in Europe and also the most trusted one. I think if you look at the landscape worldwide, we're still missing a few European champions. I think we had Bitstamp, which was relatively large but not huge, got acquired by Robinhood now, so it's no longer a European firm. It's an American one. Kraken is American. Coinbase is American. A lot of the Binance, OKX, Bybit are all Asian. And the question is, when are we going to have some really strong European players? And I think that's what we want to achieve. We have some of the lowest trading fees in Europe, if not the lowest, because we don't charge anything in the spread. So when you add the two, then we have comparisons. We really, I think, brought a big change in the industry. So that's the goal for us. We just got our MiCA license. We're now expanding all over Europe. We are growing very fast. To give you an idea, our revenue increased almost 15 times, 15, in 3 years. And our trading volume went from a few hundred millions per year to many billions per year. We have onboarded banks who now use us fully for their crypto trading. So we're really now also appealing to a lot of institutional clients. So that's really the goal for us, is to become one of the largest pan-European crypto platforms.
Nice. On a personal level, what does financial autonomy mean to you?
Good question. I think there's many definitions of financial independence or autonomy, right? And I think it's really personal, and I think everyone should have their own. Ultimately, I think it's probably, it's not necessarily having sort of retiring very early. I think some people will tell you that's their definition, is being able to stop working.
Yeah.
But if you ask me, I never wake up in the morning once thinking I have to work. We run this amazing journey, so every day feels like an adventure. So personally, I wouldn't say I want to stop working in 10 years. I think from a financial perspective, it's probably protecting your family, making sure that no matter what are your income sources as of now, if they were to disappear tomorrow, you wouldn't have to change your entire lifestyle, whatever that is, right? For some people, it's just flying first class every month and having a massive mansion, etc. And it really depends. There's no right or wrong here. I think for me, it's being able to ensure that my family is protected. It's also being able to sort of not constantly worry or not constantly look at everything when I want to buy something and thinking, can I do it? Can I not do it? And of course, when you're an entrepreneur, I think it's always part of the journey is also to hope that you will be able to build a legacy which you can transfer to your children, or that you can ultimately that someone will be interested to acquire, etc. So it's really personal, but I think not sleeping well at night in general is something that ultimately shows you how financially free you are. Because if you worry at night when you go to sleep about money, at the end of the day, what is more important than sleeping well at night? In some ways, right? I think that's an important one, no matter what that means for you.
So do you see crypto also as generational wealth?
100%. I think 100%. I think the only issue I see there, there are a lot of people who have bought crypto and just, instead of opening a savings account now at 1% interest rate, they just simply get a ledger or MetaMask or an account at Finst, and they want to put money aside in crypto for their children, right? Something that can be passed on with upcoming generation. I think there's one issue with that, is that we see a lot of clients who use self custody to hold their crypto, also for their children, etc. There is a bit of an issue here, which is that if you have an accident, if you pass away, God forbid, then what happens?
Yeah.
And I think that's a little bit the problem we solve with our platform, this being centralized, being regulated. Well, if you pass away tomorrow, don't worry, your crypto will go to your heirs, no matter who they are. And I think that's a little bit an issue with self-custody. So I think there needs to be a way to solve this in such a way that it can actually become generational wealth. Otherwise, it becomes something that you think will be transmitted and will become legacy, but it might not be like that in practice. So there's a bit of work to be done there, I think.
Yeah, there comes a lot of responsibility when you do self-custody, of course. Yeah. All right. And was there a moment in your career or life where you truly felt the limitations of the traditional finance system? The finance system we already know.
Yeah, I think we all experience it. I think we've all had some, daily limits, and it used to take a long time to open bank accounts. And there's, I'm French. The French banking system is far away from the Dutch one. In the Netherlands, I hope people understand and realize that you're really spoiled. Like the Dutch banking system is far more advanced than the German, the French, the Spanish. If you look in France to open an account, it's become better, but it's sometimes really a pain. It takes so long. You still have to print papers, and there's no ideal. You have ideal in the Netherlands, which is now changing. It's becoming Wero. So finally, Europe is going to have a common instant payment method across all countries. It's going to take time, but it's already live. We have all experienced it to some extent. And I'm thinking more about companies rather than me privately. I think there are many companies who are based in different continents and who simply need to pay invoices. And I dare you, if you're a company and you need to pay an invoice in Hong Kong to a company based in Hong Kong or in Australia with your ING and ABN AMRO, good luck. It's possible, but the amount of time it will take, the cost that you will incur, it's just too much. And I think it should change. And I think that's what typically blockchain can bring, is fast, instant, near free money transfers. So I think for a retail person, I think most retail people have what they need. There's Revolut, it's kind of easy now for day-to-day operation. But for institutionals and corporates, it's a little bit different still.
No, but when we try to open a bank account with Monflow, we were rejected by so many different banks. Is this also something that you hear or experience yourself?
As a crypto platform, you mean?
Yeah, as a crypto platform.
No, actually, we don't. We've never been rejected by any bank. Also, because so far we've been using Bank, which is one of the largest banks in the Netherlands. I can also say that we have accounts at ING. So basically, our clients' cash, which is not invested, is either at Bank and or ING, which are the largest banks. So it is. I know it's very difficult for crypto firms to open bank accounts. It is changing with MiCA, and that's a good thing, because of course now it's important to understand that crypto firms are regulated just as strictly as investment firms. I mean, MiCA is just very strict. It's very similar to MiFID. Yeah. And of course, it would be a little bit unfair that crypto platforms cannot open bank accounts if they are MiCA regulated, because essentially the level of scrutiny, of supervision, is similar to regular investment firms. So I think this is changing, but it has been challenging for quite a few parties, I heard.
Another question for you, Julian, because as a founder and CEO, where do you personally draw the line between user freedom and responsibility?
For us, it happens quite naturally. And I gave an example, which is lending. It is something which a lot of clients have said, "Oh, well, why don't you offer that? You really should do that. I will go elsewhere because I can earn, 20 basis points per year on my Bitcoin." And of course, it's always difficult to lose a client. No one wants to lose a client. But at the same time, it's our duty to think ahead of our clients and to imagine what can go wrong. I think sometimes people think of short-term gains, and we have to think of long-term value and protecting our clients in the long run. So we have said no to many things. We have said no to, like I said, I think lending is really the biggest one that we said no to. We have said no to charging clients in the spread. We don't make €1 of revenue in the spread. We could have done that very easily. We could have added 20 basis points, hoping that people don't realize. But that's not who we are. So for us, coming from TradeFi, we have very high standards, and I would never want to build a platform that I cannot recommend to my best friend. It's very simple. And I recommend Finst to everyone I know. I use it myself. I have all my cryptos on Finst because I know that ultimately we as a company are not taking risk that can penalize our clients. So it's always a difficult decision. But for us, if we have to choose between money and continuity, as in making sure that we're going to still be a very trusted business in 10 years, there's no debate. We'll always go for trust. We'll always go for safety above money and short-term gains. And I think that's something that our clients understand about us. And when we explain them, like this takes time, right? But we take the time to explain clients why we don't do lending, for example. I mean, I could just say simply it's just not available. But it's nicer to explain clients why we don't do it.
Yeah.
Because then so many times when I had these discussions with some clients sometimes, they after the call they said, you know what, I actually stopped. I had crypto on other platforms and I moved them to Fins because I understood what it meant to just get 10 basis points per year on my Bitcoin and the risks that are associated with it. So yeah, I think people sometimes don't realize the risk and we have to do it for them. So yeah, for us, it's usually a very easy conversation. It's clients first in everything we do.
So the broader message to your customers is trust.
100%. And I think trust is something that is not something that is granted. It's something that you have to earn and you have to keep in the long run in everything you do. And so it's trust in your platform, but also trust in yourself. I think people should also take the time. Look, I see so many people who really choose their bank very carefully. They're like spend a lot of time in their life choosing the right party, the right insurance company, the right bank, etc. But then I look at where they trade crypto, and for some reason,
Yeah.
it's a black box that they don't care or they don't know. I think it's not that they don't care, to be fair. I think it's they don't really know what to check for. And I tell them, do you know that this platform, like, have you read the terms and conditions? Do you understand that you're, paying 1% without seeing it in the spread? Do you understand that your assets are land? Do you understand that they don't have a headquarter, etc.? And then it takes quite a while for them to realize that, hey, that's true, actually. Why do I not give an equal amount of attention to my crypto exchange than I do for my normal bank or insurance company? So I think, people need to spend at least a good amount of time choosing their parties wisely, just like they do for their banks or for their insurance companies.
But how come people are not that responsible with their crypto, and they do with their bank account? How do you think this is?
I think the number one reason is because platforms have been very opaque and are not transparent. That's the number one reason. And luckily, this is changing with MiCA because now you have a lot of things that you have to disclose under MiCA.
That's true.
But pre-MiCA, crypto was a wild west. Anyone could do anything, really. There was no investor protection, no rules. And there's two types of people in life. There's those who need rules to play fair, and there's all those who don't wait for rules to be there to play fair. We didn't need to have rules in place to, for example, set up a very strong asset segregation structure. We didn't have to do it. We could have just, not do it. It costs money, it costs time, it costs effort. But as I always say, it's not because you can do something that you should do it. And a lot of platforms have made it very difficult for their users to understand what is going on with their assets. So I think the responsibility is number one on the platforms. And then number two is people should take, like I said, a little bit of time. If you want to invest 50,000 or 100,000 euros somewhere, well, personally, I would take the time to read a little bit about the platform, their Trustpilot score, where are they based, have they had security incidents in the past, do they have insurance, where are the money held, is it at a Dutch bank or some random bank, which I don't know. So I think people don't take enough time. And I think platforms have not been transparent enough and didn't give them the tools to really understand what they're getting into.
So you also take the time to educate people on social media or something to tell them why Finst is a good platform for them.
We have an academy in a learn section where we have hundreds of academy articles where we try to educate people on many topics.
Yeah.
And through the onboarding journey, when you open an account, we also try to be very clear. For example, when you use staking, well, we tell you that there are risks with staking. There's nothing to hide. So if there's nothing to hide, there's nothing to hide. It's like it's like everything. You just have to be honest, be truthful, and then you gain people's trust that way. But I don't think that the right way to do it is just to hide things and hope that no one will ever find out. That's not how we operate.
And if you look at the Dutch crypto market and compare it to neighboring countries, how do you think that the Netherlands is performing right now?
Very well. I think last time I checked, it was a year ago now. The adoption rate in the Netherlands was about twice as high as it was in France and Germany. I think back then it was about 12% of Dutch people owning crypto, 1 in 8, which is huge, huh?
Yeah.
And Germany and France were about 6%. I'm not sure if these numbers are still accurate, but I think the order of magnitude, it's probably still somewhere around that. And I think that has to do with the fact that the Netherlands is a wealthy country, number one, more wealthy than Spain or France, if you look at on a per capita. Number two is it has to do with the fact, as I mentioned, that the Dutch financial system is very modern, very digitalized, actually almost completely digitalized, meaning that people are a bit more inclined to new technologies, especially with financial services, because they're used to it. They're used to Ideal, they're used to all these things. I think Dutch people, most of them don't have debt. By debt, I mean personal loans. That's not a thing in the Netherlands. Credit card doesn't exist in the Netherlands. I mean, of course, it exists a little bit, but most people don't have credit cards. So I think they're more conscious about their money. And also you have a pension system in the Netherlands where you are in charge of building your pension to some extent. Of course, you have the state pension, but most people don't really rely on that. They also build their pension with their employer and they do it themselves. So there is a culture of investing in the Netherlands which is much more advanced than in France or Germany, where we rely on the government for a lot of things. So I think when you combine these things, wealth, culture, digitalization of the financial services, you end up obviously having people who are much more inclined to try crypto. And that's why we have about 2 million, I think, about 2 million investors in crypto in the Netherlands, which is it's a really, really high number. I think it's probably even higher than people investing in the stock market now, which is incredible, right? In the scope of 10, 15 years, the stock market has been there for 60, 70 years. And in 5 times less years, you now have the same amount of people investing in crypto, which is incredible.
Yeah, people are getting more comfortable with crypto nowadays. But do you personally believe crypto will be mature into real wealth infrastructure than a speculative market?
100%. I think it already is, if you ask me, to a large extent. I think this is due to the fact that the market is becoming bigger, and the market cap is about 3.5 trillion now. Huh? That's give or take where we are. So it's a very different market size than it was a few years ago, where there was 500 billion. That also means that the market is less volatile. So Bitcoin doesn't really move by 20% every day anymore. It's when it moved by 5%, people are getting worried already. And this shows you that it's becoming more mature and it's becoming more of a normal asset class. where volatility is a little bit less present, where infrastructure is becoming a little bit more mature as well, with platforms like us and like you guys with MiCA. There's a stronger regulatory environment. I mean, every second week I see a new bank in Europe who is launching crypto for their users.
Yeah.
That's the signal. Banks, all of them, without any exception, 10 years ago, were all against crypto. You're going to find one that said, I don't mind crypto, but let's be honest. European banks were all against crypto. And I'll be honest with you.
4 years ago.
Yeah. Even less, indeed. At the Giro, we were also not really fond of crypto. We thought, hey, and by we, I mean the management, thought, hey, it's not really something we should get into. And now, guess what? They also offer crypto. So when you see all the people that said crypto is a scam launching crypto, you know you have already reached a certain level of maturity.
It's a signal, yeah.
Yeah, it's a good signal.
But when did you, by the way, get in touch with crypto?
I started in 2017 because I still remember 2017. I'm not like, one of those crypto people who said I knew about Bitcoin in 2013. The truth is I didn't. So I really got to learn a bit more in 2017 when all these clients at the Giro. You know why? Because 2017 was a big boom, right? I think Bitcoin was at 4K back then, went from 1 to 4, I think, if I'm correct. So it was really the year where every time I would take a Uber, I would hear the Uber driver say, hey,
Bitcoin,
he's always on his phone buying crypto. So when you see your hairdresser and your Uber driver stepping into it, then you know something is happening. So at this point, it was a bit hard to avoid. And they were the first exchange traded products. So ETNs, certificates you could already buy Bitcoin via certificates on the stock market. So it's not the real Bitcoin, but it's a little bit like an ETF, except that it was just one underlying, which was Bitcoin. So we had those at the Giro, and some clients could buy Bitcoin that way. So I got exposed to it at that time. But of course, I started a little bit more when we built Finst. And to be honest, the bundles, I wanted to buy bundles for myself, to build bundles and buy them for myself, because I needed a product where I could diversify easily. So every time we build something, we do it for ourselves. And that's a little bit why we built Finst as well, because in 2021, 2022, we said, hey, we all said we'd like to buy crypto. But when we looked around, we just wouldn't do it on any of the platforms available. So we said, well, we have to build it then.
I think that's a great guide in whatever we are building, to look at what we want to use ourselves.
If you don't use it yourself, then you shouldn't build it.
Indeed. Yeah.
They can always be something that you build that you don't use, but not because it's a bad product, just because at this point you're not interested in using that service. Yeah. But in general, that's our motto in everything we do. If we don't use it ourselves, or if we wouldn't use it ourselves, or recommend it to our family and best friends, then we don't build.
No.
But what was it that triggered you in 2017? What was it that you liked about crypto?
I think blockchain back in the day, like this whole idea of having...
the idea, okay.
The idea of having a public database where a transaction cannot be modified, cannot be canceled, etc. That was a big thing, right? Because I mean, working in traditional finance, transactions are constantly not canceled, but they're constantly modified, and they're it's normal practice in a financial system, and it's always subject to someone deciding to just revert a transaction or change it. And I think the idea of having no one being able to control what happens is actually very appealing. It can also have downsides, and that's why it needs to come with also an environment where things don't get too crazy in order to gain trust. But yeah, I think the blockchain itself was really interesting back then, and that's why you now see a lot of financial institutions starting to use it. I also think that it shouldn't be about just using blockchain just to say I use blockchain. I think there are it's a little bit like AI now. If you ask me, everyone wants to put AI everywhere. And at some point, if there's no need for AI, there's no need for AI. You don't need to, sound cool. I think blockchain was a little bit like that back then. Everyone wanted to have something about Web3. And I think now, after a few years, almost 10, it's no longer that cool thing, that just feels good to mention. It's kind of a thing. Either you do it well, you have a business case, you really add value, or you don't even mention it. But look at LinkedIn in 2017. everyone had some Web3 in their title. Like it was really the cool thing.
Yeah.
And now that has switched to AI. It's no longer
Yeah.
about Web3. Sometimes you see Web3 and AI.
But you also saw that
basically,
with NFTs, right? Every
same thing.
company wants to do something with NFTs, and now no one.
Absolutely. It was exactly the same. So I think it's important to try to extract the real value out of it and not turn it into a cool thing. And I think that's a little bit how I started to get exposed to it. And that's how we also ended up building Finst eventually.
Yeah. But when did you discover that the financial system we know is broken? There must be some way, a
Look,
moment for you.
I'll be honest with you. I don't think it's broken. I think like what does
Out,
broken
out
mean?
maybe outdated.
Yeah, I think it's definitely it doesn't enable people to do as much as they could. And I think, of course, without going into political topics, the whole idea of people saying, yeah, but money is being printed forever, etc. I understand that. And in that sense, something might be broken indeed. But I don't think that for Mr. Everyone, I don't think Mr. Everyone can say, oh, I think the financial system is broken. I mean, most people have a bank. If they thought the financial system was broken, then why do they have a bank? They shouldn't have a bank and they shouldn't have a card and they should just have cash at home and not use the financial system. But everyone uses the financial system, or 99% of people. So I don't think it's broken. I think it definitely needs a strong update and upgrade. And there needs to be indeed technology and people who, the financial industry is a very comfortable world. It's a world that has been like that for 50, 60 years. If you look at settlements, clearing houses, like the Clearstream of this world, LCH, those are companies who have, been operating for decades in the very same way. Nothing has changed. Actually, when you buy a stock, most people don't know it, but if you buy a Shell stock, it takes 2 days for settlement to happen. So the broker only get the stock 2 days later. Of course, when you tell that to someone who buys Bitcoin, it feels strange, right? So I think it's always very hard to get out of your comfort zone. And the financial industry is a very, very, very big comfort zone where people don't want too much change because their job could be at risk if it changes too much. So that's why it takes time to move, because there's so many things that are intertwined, and not everyone wants everything to change super quickly. It could, but it won't. Also because of political reasons behind, because of the need and the willingness to control populations. That's also something that governments really like to have, is control. And of course, Bitcoin, and not just Bitcoin, but blockchain in general, takes away some of the control. So you see what I mean? I don't think it's broken as in nothing works and you can't use it, it doesn't move. No, there are things that are happening. But in order for them to really grasp the full potential of what it could be, it takes a lot of people with strong ambition, strong beliefs, and that say, look, this is going to be the future and we need to build the future, or we just continue living in the past. And yeah, for that, it takes time, but it's going in the right direction, I think.
And what do you think about the early, let's say, the early Bitcoiners who wanted to create a movement, which is quite subversive against the government, against the banking system? Do you think that they are exaggerating, or do you also understand why they say that?
Well, first, I respect them because I still see today people who have bought Bitcoin at, no joke, a few tens of euros or a few hundred of euros.
Yeah.
I don't respect them for having bought them at that price. I respect them for having kept them all years and never sell them. I think that's number one, really. Huge respect.
And not losing the private keys, I hope.
And not losing the private keys, indeed. I honestly don't think I would have been able to just watch these prices go at 100K and just not sell. So that's number one.
Yeah.
And it takes a really strong belief to actually, hold on to something for a decade and see it moving times 1,000 and just keep it because you really believe in it, right? I think it's something I really respect.
Yeah.
I am not a Bitcoin or crypto maximalist, personally. There are some people who are like that, who say the world has to be crypto, otherwise nothing. I don't believe in that. I'm not an extreme person. I like to try to find out how we can take the best of everything and make the
Building a
system
bridge.
better. Yeah, building bridges, etc. I don't believe like it's black or white. You know, the world is not black or white. It's always a little bit something in between. Um, so I understand people's opinion. I understand people who say, I don't trust government. I think our money is losing value because of inflation, because of um, central banks who are constantly printing money, etc. So I think those people, they're really against that, right? And they said, ultimately, the best way to protect my wealth and to transfer it to the next generations is to use crypto. I respect that. And usually those people are also against banks because they don't want banks to see how they're spending their money, etc., or governments. At the same time, the same people also have a bank account, use Ideal every day, use their PIN card every time they go to Albertine and buy groceries. So I like to challenge them a little bit, these people, and I say, okay, if you don't believe in any of these things, then close your bank account, keep all your money under your mattress, don't ever use a credit card again, and tell me how your life is going to be then.
It's impossible because
Exactly.
you cannot pay in cash above
Exactly.
3,000. So
Yes, it's impossible. That's number
yeah,
one. And even if you could, how are you going to book a plane ticket? You're going to
yeah,
go where? And you know, so
you have to.
I respect the opinion, but if you truly believe that, I only believe in crypto and nothing else, then you should really use nothing else. And then life becomes all of a sudden you feel like you're going back 100 years. And
Yeah.
that's what I mean by I'm not a Bitcoin maximalist. I don't believe in a world where you throw away everything that already existed and you just keep crypto. It's not going to work. So, that's what I mean by that. I respect these people. I respect their conviction. Um, but I always think it's good to be moderate and it's good to try to understand all sides of the coin.
But in the end, everything goes on chain. If you see that Wall Street also is going on chain with their stocks.
It's taking a lot of time and it's
Yeah.
currently at a very small scale. If you talk about tokenization, I think tokenization has become a lot more important in stablecoins, in bonds. I think a lot of government bonds are being tokenized, which is great because you can
Yeah.
essentially earn risk-free interest rate in the form of tokenized securities. I think tokenized stocks are starting a little bit, but by the time we get to a world where you can buy all your stocks in a tokenized form, we're not there yet. I think it's going to take quite a few years. But I think we're going to get there, and I think we as Finst would like to play a role in that because we come from TradeFi
Yeah.
and we're now into crypto. So you can imagine we are really at the intersection of these two worlds, and we understand these two worlds really well. So we would like to play a role, but the truth is we're not there yet. Infrastructure is not ready, except for bonds, tokenized bonds. Tokenized stocks are a little bit of a gimmick now. I've seen some companies offering tokenized stocks that are not listed. You have to understand, like OpenAI, stocks that are tokenized. I think this is the biggest nonsense ever because essentially you're buying a CFD on a non-listed instrument. So you have no valuation. You don't know what's the valuation. It's basically buying on the secondary market in a tokenized form, but there's no liquidity in there. How can you buy something that's not listed by definition? You know, it's a
Do
little
you
bit.
know? Do you know Hyperliquid, the decentralized
Yes.
exchange? You can now buy tokenized stocks there. Is
Yeah.
that what you are saying?
Yeah, you can do it on Kraken as well. You can do it on Robinhood as well. Actually, Robinhood was the first one to introduce OpenAI tokenized stocks, etc.
Yeah.
So I'm aware of the fact that it has started. It's really a good step in the right direction. Maybe some people wonder, like, okay, why do I care about tokenized securities? I think if you want to keep your tokenized stocks on your ledger, if you want to do self custody, well, great, you can do that. If you want to trade 24/7, you can do that.
Yeah.
And if you want to have, technically, it should be very cost efficient because it's on the blockchain. So settlement should be quick. So there are definitely benefits, and we are indeed monitoring the companies that are starting with that. We could today already trade tokenized ETFs. Like that's already possible. All the infrastructure is there, but you also need a different license. So, for example, for us, we would need a MiFID license to offer tokenized stocks because it doesn't fall under crypto. It's a financial instrument
Oh,
that is
really?
being tokenized, and therefore you need a specific license for it, which, as you know, is quite a big process takes a lot of time and costs a lot of energy and money, etc. So I think we're gonna get there slowly but steadily. And if we do, then that's of course very interesting. If you could trade 24/7, I think it's really
So
nice.
so let's say another 5 to 10 years.
Yeah, I think it will take 10 until really you can buy. I think for us, it's tokenized ETFs are very interesting, more than stocks, I would say, if you ask me, right? For the majority of people. Because if you look at the most popular asset class among retail investors today, the fastest growing one is ETF, it's not stocks. Therefore, it would make sense to be able to buy an MSCI World in a tokenized form, right? But of course, those ETFs, the underlyings are stocks, and stocks don't trade 24/7. So outside of regular market hours, you end up tracking futures. But futures are also not trading 24/7. So basically, the question becomes, when it's weekend, how is the liquidity looking like? Are you going to end up having spreads that are huge? Because then you're going to tell people, hey, look, there's this new great thing. And then they're going to end up selling their ETF on a Sunday and lose 3% in the spread because there's no liquidity in the market. You don't want to have that kind of experience, right? You want to really do it at a time where the experience, it feels the same. And I think besides the trading part, there's very interesting things in tokenized securities whereby I've mentioned that actually in another podcast, and I think this could be quite big. We spoke about it with people in the team. Listed companies would love to know who are their shareholders. And when you buy a share of Shell or Tesla doesn't know who you are, or Shell doesn't know who you are. But ultimately, they would love to, because if they could communicate to their shareholders directly, because they know their wallet address, imagine what the world could look like. Because if I own a Tesla stock, let's say a tokenized Tesla stock, Tesla knows my wallet address. And basically, if I buy a Tesla or a Tesla product or a Booking.com product, doesn't matter, then I could get basically a discount because they know I'm a shareholder. So companies could incentivize people to become shareholders, which is great for them. And shareholders, consumers, could be incentivized to become shareholders by getting promotions, etc. Because ultimately, companies now know who are their investors. And that's not the case today. Companies don't know who invests in them. They know the broker. When you buy a stock, a Tesla stock at the Giro, ultimately, the Giro is the client officially for the custodian. So basically, Tesla has no idea who is owning their stock, or Shell, unless you administer those shares or you register those shares, but no one does that. So I think tokenized securities, besides the trading 24/7, could be very interesting to enter into a world where being a shareholder of a company is also providing you benefits that you would otherwise not get if you were buying traditional stocks.
But people are not aware at the moment that the tokenized stocks are not tradable on the weekends because of the spread you earlier mentioned. So how do you see this in the future? For example, Tesla are building their own token or their own blockchain?
No. I don't think anyone will build their own token. I mean, some might, don't get me wrong, but I don't think this is what it should be. I think what it comes down to is that clearinghouses, custodians, CSDs, so central securities depository, as we know them, those are all the part of the iceberg that people don't know exists when they buy a stock, but they're all the parties that are involved in the chain, in the custody chain. That's where ultimately the infrastructure needs to be built. Because settlement could then go to T+0 instead of T+2, which means 2 days settlement could become 0, like almost real time, which also removes settlement risk. That's actually very interesting for a lot of trading firms. So the existing market players need to adapt their infrastructure in order, and also exchanges like Euronext, Nasdaq. In the United States, they're already taking quite some steps towards that. In Europe, a little bit less. But we cannot, I don't believe in tokenized securities where all the Euronext, Nasdaq are outside of the picture. I don't believe this is. So I think it needs to happen not at the level of the companies, at the level of the market participants, where all the custody parties that are in the custody chain upgrade their infrastructure in such a way that you can choose a settlement with a normal stock or a tokenized version of the stock. Once that becomes the case, then as soon as you are a listed company, it's not going to be your choice whether or not your stock is tokenized. It's just going to be the clearing houses and the custodian will just offer that option to market participants, and it won't have any impact on you as a company. But imagine now if you have a benefit. That's what I was saying. If there's a benefit for companies and consumers, which are also shareholders in some cases, to know each other and to communicate with each other, then the world can really, really change.
It's interesting. Hey, and Julien, to round it off, what is your personal goal?
I have many. One of them was to become a father. That is done.
Check.
I think building a family was a very important one. I think I work probably 60, 70 hours a week on average. Crypto is 24/7. So, and when you're an entrepreneur in crypto, then you have, you have a lot of work usually. There's not so many things as holidays and weekends. So I think trying to work out the two, private life and professional life, is already a nice goal in general. And I think my goal is to continue this beautiful journey. I'm a very competitive person. I don't play to play. I play to win. And when we started this adventure, we did it because we knew that we could become number one, and we will do everything we can to become number one. And in the process, we hope to help our clients, but also clients of other providers who are now decreasing their fees because of us, upgrading their services because of us. So it's a bit of a healthy competition that we are that we are together with other parties sort of building. So yeah, my goal is to make this company a big success. It already is a big success, but constantly trying to get one step further, get out of your comfort zone, do things that have never been done before. These are things that I personally really love to do. Yeah. Sometimes you fail, huh? It's not always a success.
Yeah, you have to fail. Yeah, of course.
If you don't fail, then you have never tried as many things as you
exactly.
You
exactly. Yeah. And are you familiar with ikigai?
With sorry?
With ikigai.
Ikigai?
Yeah, that's a Japanese methodology. It's about defining what you love, what the world needs, what you're good at, and what you can be paid for. So, if you can, please look it up.
Definitely.
We in the show love to define our own ikigai, but yeah, cool. you never heard of it, so you cannot answer the question. So
no,
but you definitely look it up. It's very nice to define it for yourself, because those are the four pillars. So what you love, what the world needs, what you can be paid for, and what you're good at. That's your ikigai.
Well, that's actually interesting, because somehow these are the questions we often ask ourselves as entrepreneurs, because it really relates to running a business, including the part which is what you can be paid for, but that's ultimately,
of course,
will someone buy your product or your service? So I think I probably have thought of these questions like independently at some point, but now I'll try to think about them all together in one go.
Well, it's right. It's about passion, mission, vocation, and profession. So cool. Those four combined are the ikigai.
Very interesting. I'll definitely look it up. Thank you.
Okay. Well, Julien, thank you so much for joining the podcast. I think we have put together a really great episode for this.
Thank you so much for having me, Leandro and Shay. I wish you all the best with Monflow, and I hope everyone enjoys the episode as well. And we'll speak soon.
Yeah, of course. We'll put some links in the description of Finst, of course. Thank you so much for watching to this episode, and we hope to see you at the next one. Ciao.
Yes. Goodbye, guys.
All right.